Back everyone, this is Native Day Trader with an after action report. Today is Tuesday, November the 5th, and we're going to be going over a Micro E-mini Nasdaq 100 trade. This trade had a proper textbook setup and follow through, so I want to review it for those of you that are interested in trading the futures commodities market. This is exactly where this financial instrument can be found. And so, without further ado, let's get right into it. Every bar on this chart is 15 minutes. I like to trade the 15-minute chart for day trading. Some people like to trade the 2-minute. Some people like to trade the 5-minute. Really, there's pros and cons to every chart that you look at. And the pros of the 15-minute is that, you're going to get bigger price action movement, which means you're going to make more money off the 15-minute chart. The cons are you may not get as many setups as you would on a 2-minute or 5-minute chart, but there's always trade-offs. This is life. So with that, let's get into this. What you're looking at on the bottom is the time. I'm on Pacific Standard Time. So 6 o'clock is really 9 o'clock. I like to trade, that's 9 o'clock Eastern Standard Time. I like to trade when the U.S. stock market opens. So that's 9:30 Eastern Standard Time. If you live on the West Coast, it's 6:30. And wherever you might be, it's whenever it opens for you. So let's get into this. Before any market opens, I like to draw what I call the opening zone. And the opening zone consists of four main things. It's going to consist of the prior day high, the prior day low, the 20, and the 200 moving averages. Those are the four components that make up the opening zone. So as we can see here, the red line is the 200 moving. The blue is a 20 moving average. See how close they are? They're very, very close. Some of the best trades you're ever going to make in your life are going to come when the 200 and the 20 are very, very close. When they're touching, when they're very, very narrow or small, that's when you want to look for a trade, because the biggest movements, the biggest price action comes from the smallest of states, or the narrowest of states, may I say. So let's look into this. I like to go back a half hour before the market closed. Or I like to go back a half hour before the U.S. stock market opened. So this would be the one bar before the stock market opened. This would be the second bar before that. So this is a half hour. 6 o'clock a.m. is 9 o'clock Eastern Standard Time. It also happens to be the lowest spot on the chart. So we're going to draw that. We're going to note that, and we're going to draw a line all the way to infinity. That's where that is. Next, we're going to note the 20. We're going to note the 200. I mean, they're so close that might as well be the same line there. And then where was the highest point? Well, really the highest point's right here. Okay? We draw that right there. That more or less is what I call the opening zone. What does that mean? The opening zone means simply this. If price moves out of this zone upwards, statistically, the follow through is going to be the upside. If price breaks this and goes down, statistically, your move is going to be to the downside. I hope that makes sense to everybody. But that's what I call our opening zone. All right. So, that being said, when we have price that hasn't revealed itself yet, we wait. And also, may I just say, there are no trades in the opening zone. We wait for price to reveal itself to us. We do not chase things in this zone. This zone right here also contains the trap zone, which means if you're in here, you could be trapped, price could go against you, you could be stuck in here all day, there's no guarantee that price will break out. So we wait. We bide our time and we wait. We should be called day waiters, not day traders, because we are waiting for the proper setup. So let's get right into this. So as we wait for the market to open, we've marked up our chart, and you do this for every single chart that you want to trade. Doesn't matter what financial instrument it is, doesn't matter if it's a crypto, forex, stock market, futures market, doesn't matter. Always draw an opening zone on your chart. Okay? So then let's just see. Let's just see what happens after price begins and the stock market starts. So let's just see here. Bam! What do you see right there, everybody? Look at that. Look at that. The first bar of the day. The first bar of the day. Meeting us right here. Bam! That is where you should be in. Textbook setup. 2 lots right here, minimum. You can do more if you got a bigger account. I recommend 2. For those of you that are starting off and want to ease into this game, start with 2. If you got more to risk and you can afford it, by all means, have at it. But look at this gigantic candle. 9:30 a.m., 6:30 a.m. Pacific. The first candle of the day for the New York stock market right here. Look at this thing. It is a power bar. If you look here, let me just draw my setup back up here again. Right there, right there. This was our move right here. 2 lots again. Look at this right here. You have the 200 right here and the 20. You have both key moving averages pushing this bar, and this bar literally jumps off the 200. That's one of the most powerful moves you can look for and identify. A surging, powerful bull green bar off of the 200. It's one of the most powerful bars the stock market can throw at you, the futures market, whatever you're into. This is one of the most powerful moves you can have off the 200, surging. And look at this. See how it clears everything? Really, the prior high for the day was somewhere right around there. Let me just draw that a little better here for you. Sorry, this freehand out is how this goes right here. See? Somewhere around there. This bar clears everything. It clears all of the previous day's high or the previous data from before the market opened. It absolutely surges off the 20. I cannot state that enough. Surges off the 20, surges off the 200 moving average. That is power right here. You're in for 2. Now, what you can do is from this point forward, you can either add when this green gets removed from here, you could add 1 more if you wanted to. 1. Now you're in for 3. Stop. Where is the stop going to be? There's 2 places where you can put your stop. You can either put your stop under this powerful bar, under the 200 right there, or if you prefer a 1 bar stop out, a little looser stop, you put that right there under the previous candle low. I am a proponent of either one, but at the most you're going to lose is 1 bar. So if this were to go against you, you would only lose that candle right there, which would essentially be 1 bar. Okay? Keep your losses small. Keep your gains as high as you can. Risk management is also the name of the game. So again, we bought here for 2. We bought here again when this green reveals itself here. We're in for 1. So now we got 3 lots. Okay. We wait. There's a little bit of a dip here, holding through, holding through, holding through. I would have either gotten out here or here. Either way, you want to get out for 2. There's 2. So now we have 1 lot remaining. Well, how do we play that 1 lot? First things first, we want to rotate our stop to break even. So if our stop was either here or here, we're going to rotate our stop up here to break even. Right there. This right here is break even. Okay? That way, if this trade does go all the way back down here, you still made a profit by selling up here. Does that make sense to everybody? So then what we'll do is we'll wait. If you wanted to, here's the 20 moving average right here. Anytime a red bar gets eliminated by the green, you get in. So you could have gotten in if you wanted to. You could have gotten in here. Could have also gotten this bar right here, this bar right here, or this bar right here. Any one of those could have gotten in for an extra 1 right there. So now we're back in at 3. Started with 2, added 1, sold 2 for a profit, rotated the stop up to break even. Now we have 1 left. We buy right here at this green candle right there. The moment that this red gets overtaken, it's another 1. So now we're back in for 3. Sell out here. Selling out for another 2. If you want, you can walk your stop up from here. Some people like to walk it up to here. This bar right here. There. And maybe you got stopped out there, but you're out. And that is how you play the Micro E-minis Nasdaq 100 for today. That's how you should have played that. This is how a professional trader would trade that. And I want to demonstrate that because a lot of people are out here swimming in these markets against the current, placing trades in the wrong place, in the wrong direction, wrong position. And so I want to go over that and at least eliminate this. Following this setup right here can eliminate 85% of your losing trades. Now, what do I mean by that? I mean, we went with position. We went with the power. We went with everything. We went with the current, okay? Let me just erase everything here for you. Let me just erase some of these things here for you people, okay? Just so everyone can understand what I mean. We don't fight the current. So many people want to fight the current in life. They want to fight everything. They want to fight the markets. They want to fight themselves. They want to fight any advice that could be given to them. You know, everyone on YouTube is Warren Buffett until they get their Robinhood account blown out and they think that that this whole market and this whole game is a scam. When in actuality, they have no plan. They have no rhyme or reason. They're just literally throwing darts blindfolded. And I'm here to try to help you regain some of those 85% losses that you've had. I'm not giving any financial advice. I'm just simply showing you how you trade the markets professionally, okay? The overall theme is up after the open, which is right here. Since the overall market is up, we go with the trend. There's no sense in fighting this power. And people say, well, what do you mean by power? How do I know for sure that this move is a move to the upside? How do I know not to short it? How do I know not to go against the current of what is unfolding? And I say this, you see all these green bars right here? You see all these green bars? I'll make it much easier for everybody to understand. You see these green bars right here? What I want you to do is whenever you have a series of green bars like this, go ahead and draw them in as if they were one bar. Okay? Okay? This is one big bar right here. Right here. Look at this bar right here. Okay? When we connect all the green bars that were in a series together, this is what we're left with. This gigantic green bar. Now, can everyone see this wonderful big bar, boys and girls? What does that look like? You would be a fool, an absolute fool, to try and short this here. Now, is it possible that this could retrace that far back? Possibly. Anything can happen in life. But statistically, is it probable? Absolutely not. Because we have a couple factors that are in our favor. First and foremost, is you have the power here. You have the 200 here, which is what the first candle exploded off of, and you have the 20 right here. You see how these here are smaller than when they're right here at the end of the day? Your best moves are going to come from the narrowest positions. And the 20 and the 200, as this goes up like this, and this is relatively flat like this, price goes up. This was as close to textbook as you could have gotten today. So I really want you to focus on this, to study it. You can do back testing, you can do whatever you want. But when you see a power bar like this, when we connect all of them, starts with this move right here. Bam. That one right there. That one ignites this entire move and sets the tone for the entire day. This is how you trade the markets. This is how you make money. Again, this is Native Day Trader. I want to thank you for watching. If this video was of any help to you today, please give it a like, a thumbs up, subscribe. I do my best to make content that actually helps traders so that you can identify trends in the market, you can identify key entry positions so that you can live a better life for yourself, for your family. And if you are risking your own money or your family's money, this is how you can actually prevent catastrophe from striking by trading on a whim or without a trading plan or without even knowing what you should be looking for. Until next time, guys, thank you for watching. This is Native Day Trader saying, trade on.